All right. Good morning, everybody. Happy New Year's and 2022. This is going to be the first installment for our educational videos. We're going to be talking about today. We're going to be talking about channels and how to draw a channel and the benefit of a channel. We're going to make it short and sweet and to the point, and hopefully you guys are going to benefit from it. Okay, and here it comes. So a river. So you have a left bank and a right bank. Nature in its constantly, as it flows, as energy flows from one side to the other, it will make an edge to it. Look how beautiful that in Colorado. So it's clear and it's defined, and it governs the movement of water in this case. And in price action, since price action is a manifestation of natural behavior of people, then typically price action does move in channels. And it's a very good idea for us to figure out how to draw one and how to manage our thinking around a channel. So with the harvest trading system here, the way we measure an actual channel is every channel has 3 points to it, meaning that you have to figure out where the first 2 points and then the third one is going to be the high of the most recent move. And the process of building one is fairly simple. You have to kind of look, even if you don't have all these colors and the system, literally just off price action. You are looking for the most recent low of the prior move. And in this case, that point is going to be right here at that low. So we're going to come in here, and in NinjaTrader 7 or 8, you have what we call a trend channel. And that's what you have to kind of click on. Then you could come in here and click on that first point. And that first point is going to signify the lowest point in which the prior move made. Okay, so now the cloud shifted, meaning that the sentiment has shifted, and now the market made a minimum of 2 to 3 candle pullback, and then 1 candle reversal. So it did that twice here into the middle of the range. So that is the second point of that inflection. So now you have point number 1, which is the low of the prior move, then that first initial retracement that resulted in a reversal, and that is that right here. Then you are painting the third point, which is the high that generated that whole wave. So here you go. So point number 1, right here. Point number 2. Then the high is point number 3. All right. So the market continued to move within that channel, then broke down and reversed one more time. And that will lead us to draw channel number 2. And typically any river will have, one main channel and, 1 or 2 subsequent channels. But in trading, we just kind of keep it simple, just 2 channels that we look at. So right here, we do the same exact thing. We draw from the same point, which is the lowest low of the prior move, then the point in which the market reversed, and then the same point that started channel number 1. So now you have channel number 1 running up, second channel. So now the channels are drawn. How do we use this to make better trading decisions, and that has very defined risk and reward controls? Once you got channel number 1 figured out and channel number 2 figured out, then you generated an area where the market, if it breaks channel number 2, then you got a very decent place for you to get stopped out. So that area is going to be right here. Any price under that point, under the 16,403, and we're looking at NASDAQ 100. I mean, it doesn't matter. I can show it to you on just about any other instrument out there. It's going to do the same exact thing. So any point under that is a stop, and then any trade that you take here ultimately will have that stop as a guide, and as the price move higher, that stop actually moves along with it. So right here, then and as the price move, we're going to go up here to that point. So now, so really it's about 429.75. Now, ultimately, you have multiple stops along the way that can help you as well. So if you don't want to take that big of a swing, and also you can look at channel number 1. So let's take that as your initial guide. So if you break that channel, then you are looking for channel number 2 to actually protect your movement. So ultimately, what we're seeing here is drawing these channels mimics a natural behavior that the market, that nature does, and price action is a manifestation and a fractal of what typically you would see in nature to begin with. So drawing channel number 1, channel number 2 has defined my risk to me in a very clear terms. Any break below channel number 1, it puts the market on notice. If it doesn't generate channel number 2, then the longs are not interested. And once you generate channel number 2, an entry would be at 413.75 with a 10-point stop under that 403. So right there, I define my risk about 7, 8 points, 10 points max, and the potential are to the upside all the way up to the top end of that channel. So that's just a brief description of it, the benefit of a channel, how to draw a channel, and hopefully that helped you. If you have any questions, let me know, and we will see you on the next one. Have a good one.